Okay, so thanks so much. I'm very happy to have with me here today Dr. David Palmer. Not a medical doctor. He won't be examining me today, hopefully.
Just a doctor of rocks.
Doctor of rocks.
Yeah.
So David is one of the premier mine finders in the world. So at this point, he's found one mine, he found the mine. It's in production, and he's found another deposit which we think will be a mine. I think will be a mine, and also a company called Fresnillo thinks will be a mine. Fresnillo just a couple days ago agreed to acquire David's company, Probe Gold, which is a publicly traded company on the Toronto Stock Exchange, for $780 million Canadian, which is a big premium. We're very happy. We're shareholders of Probe. So
thank you for that.
Yeah. Well, thank you. Probe's done us a great job over the years. And we'd like to actually talk to him today about how to find a gold mine. So the first question that I'd like to ask David is, where are you from? What was your first job out of college? Where'd you go to college? What was your first job out of college? And it's kind of what your first career kind of moves were.
Okay, yeah. So if we look at where I'm from, I kind of think of from a number of places. So I was born in Sudbury, which is one of Canada's large nickel mining camps. So maybe a little bit in my blood. Yeah. And then I grew up mostly in Nova Scotia, which is East Coast Canada. And so basically went to university in Nova Scotia,
Okay.
St. Francis Xavier.
Okay.
That's where, interestingly enough, I didn't start out in geology.
Okay.
If I look at it, half my family is geologists.
Okay.
But I didn't really have an interest in geology. I love the outdoors.
Okay.
I actually went into biology.
Okay.
And it didn't take.
Okay.
And I happened to accidentally get a job with the Department of Mines of Nova Scotia.
Okay.
And I fell in love with it.
Okay.
And so I came back for my second year, went to the geology department, asked if I could join.
Right.
And that's how I became a geologist.
What did you like so much about it?
I was part of a field camp, and it was probably the least glamorous of the geology jobs. It was till sampling, so basically dirt bagging.
Okay.
But it was a group of geologists. We all lived in a farmhouse, and the camaraderie, but also kind of being outside, and then I would listen to them talk about what the implications of these rocks and the dirt samples were, and I was interested.
Right. Okay.
Yeah.
So was from a geology perspective, was it the kind of idea that like you're finding something, like that your actions have like meaningful are meaningful in some way, that you can kind of put some meaning around your actions?
And you hit the nail on the head for me.
Yeah.
And I don't know if it's anything altruistic, but it was more treasure hunting.
Right. Okay.
It was solving the puzzle.
Right.
And
okay.
that's what I think I really found interesting. And you could do it outdoors.
Okay.
So it was kind of two things
That's
that
fantastic.
I love to do.
Okay.
Yeah.
And so you went on to get a PhD in geology. Can you talk about that process? And you must have liked it a lot. You must have also liked the science aspect of it. Can you talk about that a little bit? Yeah,
I think it was this curiosity on wanting to know everything about that subject.
Okay.
And so I just went through the progression of BSc, master's, and then the PhD.
Okay.
And I always knew that I wanted to work in the industry. I always wanted to be more of a practical geologist.
Okay.
But I wanted to learn as much about it as I could so that I would be prepared for the real world.
Right.
Yeah.
And you went, so were you working when you got your PhD, or did you?
Yeah. So I worked every summer basically from that first Department of Mines job until I graduated.
Okay.
And just on summer kind of.
So summer, but it wasn't like you were working for a company. You were like Inco sent you to get your PhD.
No.
Okay.
Yeah.
Right.
It was.
So you were
summer work.
Okay. Got it. All right. So you got your PhD. How old were you when you got your PhD?
Oh my gosh. So I would have graduated in 98.
Okay.
With it? Yeah. It would have been 98. So I started in 91 for the master's. So it would have taken me 8 years. My gosh, I got to do the math.
Yeah.
I would have been approaching 30 maybe.
Okay. Right. Got it. So then did you get a job right after you, like a full-time job after you got the PhD?
Yeah. I actually worked for Falconbridge.
Okay, Falconbridge. And you were, what were you doing for that?
So nickel exploration
Okay.
in Quebec, actually, where the project is for
Right.
Probe Gold.
Okay.
And so, yeah, I was hired as a project geologist
Okay.
and came out and was just looking for nickel.
All right. Was that field work or were you in the office?
No,
What
all
was it?
field work.
It was
Well,
all
I
field-
mean, there's always a component of office work to get
Yeah.
ready for the field, but
Yeah.
my main objective was field work.
And you're out there in the field, you're in a camp, and so all these drills going, you know, I've seen these multiple times when I'm at the mine sites, but there are drills going and you're kind of directing where this drill should, what are you doing?
In the early days, drilling is something that's really interesting. When I first started, drilling didn't happen until maybe year 2 of a project.
Okay.
And so you'd be out there, you'd be collecting rock samples, you would be mapping the geology, you'd be creating an image of the model of what could be there.
Okay.
And then you would do geochemistry. It could be soil geochemistry. You're trying to locate, you're trying to, I think, filter down to where this deposit could be.
Okay.
And so we use all the tools that we've got, which is geochemistry, geophysics, geology.
All right.
And we build a model that will kind of help vector us towards what will be a discovery.
Right. So there's a team out there
so there's a whole team of geologists, and we were all geologists, and we were all basically walking through the woods,
right,
looking for outcrop, trying to put together our geological maps so that we knew what area we should be focused on.
And did you find a mine then, or did you help find a mine? Was this Greenfields? Was this near another mine?
This was near another mine. So there was at that time, there was a company called Newinsko, and they'd made a nickel discovery in the area. And of course, once somebody makes a discovery, everybody else comes in and looks, looks around.
Got it. Okay.
Yeah.
So how long did you work for Falconbridge for?
So just over a year.
Okay.
Yeah.
And then what?
And then, then I went, that's interestingly enough. So when I started, I felt that, my industry was, Falconbridge, Noranda, or Inco.
Okay.
And that I would get a job with one of those companies. I would retire at 65.
Yeah.
And after Falconbridge, that's when I discovered the junior world.
Okay.
And I hadn't really understood juniors or knew about them. And so I happened to answer an ad for a job, and it was with a junior looking in Greenland, of all places. And so I just followed up on that.
All right. How long did you work for the junior for?
So that would have been, I would say, basically I've been with juniors ever since that moment. Yeah. But the early ones, you'd be looking at a year, 2 years.
Okay.
You have a project and you follow that project, and you would just be more
makes sense,
part of a project than a company at those times. Yeah.
Okay. So when did you decide to start your own company, and how did that come about?
Yeah. So it was an interesting thing. I actually was helping out a friend with his startup.
Okay.
And that's where I first met Probe.
Okay.
And that would have been 2003.
Okay.
And I didn't really start my own company, but what had happened was Probe was a shell with an idea.
Right.
And I basically came in as the sole employee.
I see. Okay.
And so small company, and I was hired because I was a geologist, and the focus on Probe was really, go out and find something.
Okay.
And we weren't promotional. We weren't, we were really focused on the field.
Right.
And I was the only employee. And so by default, I became the CEO.
Right.
Because you need to have one.
So did the board hire you? Was that, or who hired you?
So there was 2 board members who basically, I found it was a funny thing. I'd done a favor.
Okay.
For a prospector.
Yeah.
And that prospector was partnered with one of these 2 directors.
Okay.
And so because I'd done this favor, he had mentioned it to one of the directors, Harry Hodge.
Right.
And Harry was like, "Oh my gosh, well, bring him in. We're looking for a geologist to help us with this Probe company."
Right.
And that's how I kind of fell into it.
Right.
Yeah.
Okay. Got it. Interesting. Okay. So then what's your, at that point in time in your career, in your life, what was your risk reward analysis, from the perspective of should I go and be the sole employee of this one company? I mean, do you need to be a little bit of risk? Are you a little bit of a risk taker generally, or like, can you kind of talk about that?
I think we are, fundamentally we're risk takers. But in my head, it wasn't a risk reward. It was more of somebody's going to let me go out and do what I love to do.
Right. Interesting.
And so it was more an opportunity
Okay.
to kind of do what I would, call my passion, which is exploration.
Right. Okay.
And so I didn't think risk reward. I didn't think long term. I just thought this is great. I'm going to be allowed to go out and look for things.
Do something that I like. That's awesome. Okay, cool. And so at that point, right? So I know we typically at Gabelli, we don't typically get involved in early stage exploration.
Right.
We like to see that you found some gold, and that we could see line of sight to a mine. So we ended up having a small position in your last company towards the end before it was acquired. But I don't remember the beginning. So can you kind of talk about how you ended up finding that Borden, what's now the Borden mine? The Borden mine, which is right now owned by Discovery Silver, but recently operated by Newmont.
That's right. Yeah. And so it's an interesting thing. It's a process. I always look at it as, the more lottery tickets you buy, the more chance you have to win.
Okay.
And so our whole thing was to pick up projects and you have to believe in it. I think for me, so when I look at a project, I know that I'm invested or engaged in that project right away. As soon as I look at it, I start planning my exploration. I start generating a model in my head.
Right.
It's sometimes most often wrong, but I get really kind of interested and excited about that project.
Okay.
And then I know, I want this, and I want this project to look at.
Okay.
We've been fortunate to have a fairly good track record in terms of success rate.
Yeah.
So we haven't had a lot of projects, but we've had a lot of wins.
Right. Okay.
So we do a lot of due diligence. We really kind of take a look at that project. And I would say for me, the biggest thing is, has it already been picked apart? Is it something that, there's still upside that we can exploit that maybe other workers haven't?
Okay.
And it doesn't mean it can't have ever been looked at. It just hasn't been looked at thoroughly.
Okay.
And we see something that somebody else didn't to go in and hopefully find something.
So did you start with a bunch of different, when you stared with the first one, and then you saw that this one was the best and had the most potential,
well, this is, and a lot of what we do might be ascribed to luck. I don't know, or right place, right time.
Yeah.
So Borden was our last project that we actually acquired. Okay. So we were known for being up in Ontario. There's an area called the Ring of Fire. And there was a big nickel discovery, chromite discoveries. Yeah. That was where we actually started.
Okay.
And we made a chromite discovery. And so we'd done good work up there. But it's remote. And so there are periods of the year that you can't work up there. It freeze up and break up. So spring and winter, can be difficult. So I was looking for a project that I could work on while I couldn't work on the Ring of Fire property.
Oh, well, okay. All right.
And so we stumbled across this one, went and did a field visit on it. I really liked it from the start. Yeah. And I thought, this is great when we're, when we can't work on our flagship property, we'll come down and work on this one.
Interesting. Okay.
And it turned out to be the flagship.
Right. Yeah. That's interesting. Okay. So again, this was acquired by Gold Corp. Forget the year.
2015.
2015, acquired by Gold Corp in a nice cash. Was it cash?
No, so I think it was all share.
Okay,
back then,
but it was a pretty big premium, right?
Because gold price was low at the time.
Yeah.
So yeah.
So it was a very good deal, a good outcome, I guess, is the point, from a major who bought the mine, bought the deposit, and it became a mine, and it's now producing. It's now an excellent mine. What would you say would be was the biggest impediment to getting it from that first discovery to what ended up being a mine, like what Gold Corp saw as a mine?
So it was it was actually the period that it was discovered.
Okay.
It was discovered in, gold had fallen off a cliff. So in 2013, from 2013 on. So we'd actually made the discovery in 2010. And we're working on it as gold fell off the cliff.
Yeah.
And so the biggest impediment was really, there was just not a lot of interest in gold in
Right.
exploration. The markets had basically gone quiet,
Yeah. Right.
and we had to raise money. We had to kind of continue advancing this
Yeah.
project during a rough time.
Yeah. Yeah. That's interesting. I mean, like people say that there are kind of like three legs to the stool. I've heard,
Yeah,
old timers say about especially exploration companies. And one is the exploration. One, the guy, the geologist. The other is once you've found it, you have to have somebody who can put a mine plan around it.
right.
So,
Yeah,
some type
yeah,
of engineer. And then the third is you need somebody who can raise the money
yeah,
to go and do it. And,
yeah.
it's a testament to you that you've been very successful at raising the money too, while being very technically focused.
Yeah, once again, we've been fortunate that
Yeah.
good supporters
Yeah.
like Gabelli,
Yeah.
and we can go out, and as long, and maybe to a certain degree, we built credibility, trust
Yeah.
that we're going to use the money to add value,
Yeah.
and weren't overly promotional. Most of all of our money went into the
Right.
project, and we were able to kind of move it forward even in rough times.
Okay.
Yeah,
Right.
and that's a testament to the kind of the support that we
Right.
got
Okay.
from
Great.
everybody else.
Awesome. Okay, great. So then let's talk about, so the big issue, the big project now is the one that you have currently,
Yes.
which is called Valdor
Novador.
East, Novador, right?
Yeah.
So it's just east of Valdor. And right, so let's talk a little bit more about like how you actually found that. So just to let the viewers know, probe was the first probe. Was it called Probe Gold or Probe Metals?
So the first probe was Probe Mines.
Probe Mines.
Then the spinco that came out of that transaction was Probe Metals.
Metals, yeah.
And then after Novador, we changed the name to Probe,
Gold, right?
Yeah.
So Probe Mines sold itself to Gold Corp. And as part of that deal, shareholders got a share or whatever it was of Probe Metals.
Yeah.
And Probe Metals was the spinoff. Did the spinoff have Novador in it at the time? No, it didn't, right?
No.
It was just
so,
right.
And this is an interesting kind of, I guess, evolution or transition. So when we discovered Borden in the first company, that was a first hole discovery, conceptual project.
Right.
When we got the spinco, Probe Metals, it was, okay, well, let's do it again, but maybe let's shortcut it a bit.
Okay.
Let's find a small seed resource,
right,
300,000 ounces, that we believe we can grow into something bigger.
Right.
And that's what Novador started as. But now it started a bit bigger. It was actually 700,000 ounces when we acquired it.
Right.
And so we acquired a company called Adventure Gold,
right,
who had acquired the original deposit.
right.
And that was only one of the three that we've got now. And that was the start. And then we kept consolidating until we, at that time, had the largest project in Valdor.
Right.
Yeah.
Yeah, it's amazing. Right? Yeah, it's amazing. But wait, just take one step back, just again, so the viewers know in terms of how to find the gold mine. So when it was the first Borden, and you said it was just a drill hole.
Yeah.
So what made you drill there?
Okay, so it all comes down to the site visit. So I went with the prospectors on the site visit. They had found a ridge of rock, and when you sampled it, it came back with the kind of lower grade gold, 1 to 3 grams. And it was, it was interesting, but during that site visit, we got off the ridge, we walked maybe 50 to 100 feet away from it, and there was another outcrop. And so we sampled that one, different kind of rock, but same mineralization. And when I got the assay back, it ran gold.
Okay.
So all of a sudden I went from a, 5 foot wide or, a ridge to maybe 50 feet where there was gold. I don't know what was happening in between.
Right.
But at least I knew that system looked a little bit bigger.
Okay.
And so I thought, this is really interesting.
Right.
And we acquired the project.
I see. Okay.
And that's what, the first hole that we drilled into it, we hit 300 feet of continuous mineralization.
Right.
Didn't know at the time that it was gold,
right,
but I had the mineralization. We assayed it. The entire hole ran.
Wow.
And actually, I even stopped in the mineralization because as a junior, you have to be very careful about your money.
Right.
And so we drilled, call it 300 feet of this mineralization, but I wasn't sure if there was gold in it or not.
Right.
And I thought, okay, well, I could keep going, but that's going to cost more and more money.
Right.
Let's just stop here,
Yeah.
assay it, And if it's good, we'll come back and do more.
Right.
And it turned out to be good.
Right.
Yeah.
Got it. Okay. So when you see the mineral, you see in the core that it's mineralized because it's a different kind of rock, or it has sulfides in it.
Sulfide minerals,
right, which is shiny and
yeah.
Right. So you can say, oh, this is shiny sulfide. That means that there's some mineralization which is different from the host rock.
Yeah.
Right. And then you go, okay, something happened here geologically.
Exactly.
And then you test it and it was like, wow, there's actually gold in this.
Yeah.
And so it's as, I guess it's funny because I was going to say it's as easy as walking out to the site and picking up a rock and it has gold in it.
Yeah.
But it's not that easy. Right. So,
yeah.
But I guess that's your expertise, is in kind of whittling it all down. Right.
It's kind of making educated guesses on things and then following it up methodically
Right.
to test it and determine, is there a system here?
Right.
And the problem with gold, if it was nickel, if it was copper, lead, zinc, I would have been able to see it right away in the mineralogy.
Right.
Gold, you cannot always see.
Right.
And so I had the right sulfide minerals, pyrite, there was some pyrrhotite, but I just didn't know if there was gold in it or not.
Right. Okay.
Because you could get exactly that same rock and have no gold.
Right.
And so I didn't want to waste a lot of money on just drilling more and more of the same.
Right.
So I thought, but that's the difficulty with gold, is not knowing until you assay.
Right. Okay.
Most of the other commodities, you see it,
yeah.
and you get excited. Yeah.
Right. Okay.
Yeah.
So once you drilled in there, that was the great. And after that, was it just success after success?
It was just
pretty much.
And then it almost becomes a geometry problem.
Oh, okay.
It's okay. I've found it. Now, how big is it? What's the volume?
Right. Okay.
And that is that's where it becomes very, not tedious, but very methodical. And you step out, you drill more holes. So what I'm doing is I'm expanding it along strike or along its length.
Yeah.
And at depth. And then I measure, the drill measures the width, and then I can create volumes.
Right. Okay.
And what I'm looking for is big volumes and hopefully high grades.
Right. And then right. So like you're saying, the geometry is relative to how it's mined, right? So you need it needs to be mineable.
Yeah. And this is where geologists have to be very careful, because we tend to be dreamers.
Yeah.
But there's a very practical application to what we find to mining.
Right.
And if it's not if it's not mineable, then there's no value to it.
Yeah, exactly.
So you have to be able to get it out of the ground. So geologists need to think in terms of, well, can I actually extract this?
Yeah.
If it's too deep, if it's too skinny, if it's too,
exactly.
It becomes more difficult.
Yeah.
And that's where you really need, this is why it's extremely important for engineers and geologists to work together on these things.
Yeah. Right. Because
we need to be practical, and it needs to be able to be mined.
Right. Yeah. Like I say, when I talk to clients and they say, what makes a good prospect? What makes a good gold mine? And I say the 3 G's: grade, geometry, and geography.
Yeah.
So, it's
true.
Right. So it's like the grade is the amount of mineralization within a ton of rock. And then the geometry is how easy or hard it is to get it out of the ground.
Yeah.
And the geography is very important in terms of, once it's out of the ground, how do you, well, not even that, how do you build it? Is the infrastructure there?
Infrastructure.
Right. Is there electricity nearby, or is there a town nearby? That kind of thing.
Exactly.
And so with the first one, Borden, Timmins was kind of close, a big town in Canada, in Ontario. But the better one is, if we go back now to the second one, to probe metals and now probe gold. So you were like, okay, let's skip that first step of trying to pick up rocks and look around and see where look at outcroppings and walk the field. You were like, look, the gold's already there. We know it.
Yeah.
So there was this was a past producing mine.
That's right.
That was right near Val-d'Or, which is a big mining town, relatively big. I've been there a few times, mining town in northern Quebec, right? And so is that what you saw? So it was like, can you kind of talk about why it was that, like why that past producing mine?
That became interesting. And so when we decided with the Spinco to hopefully replicate the success and go out, what we thought, and you've hit all of these points, is infrastructure. We wanted something close to infrastructure, and we wanted to find something that we could grow. And our goal was to get to 2 to 3 million ounces.
Okay.
And so take that initial resource and then grow it to that scale. But I also, because I love the earlier stage exploration, we also wanted to build a district scale project for new discoveries.
Okay.
So I think the first thing that we looked at, we started with 700,000 ounces. We saw an almost, unlimited window to grow this.
Okay.
And so we easily saw that potential for 2 to 3 million.
Okay.
Now, there was no guarantee,
Yeah.
because once we started drilling, if it had a pinched out or if something,
Yeah.
it might not have got to that scale.
Okay.
But at least in our first evaluation, we saw that window or that geological window
Yeah. Okay.
to grow to that scale. There was nothing. So when we looked, and this was an interesting thing. So to get to that project, it took us a year of looking, and we went through more than 400 projects to get there.
Mm-hmm.
One of the big problems that we had is there are a kind of an immeasurable amount of small resources out there.
Right.
But when we looked at a lot of them, there was either, we couldn't see a geological window that would allow that thing to grow to 2 to 3 million ounces, or unfortunately, some of them, had already been drilled off.
Okay.
And so the work had already been done, and it wasn't readily apparent that it had been done.
Okay.
But when we started to do our due diligence and put the drill holes together, it was like, that deposit isn't going to go through those, it's stopped on either side.
Right. Okay.
And so it'll never really grow
Right,
that much
okay.
bigger.
What was the geological window that you saw that made you think that so Monique was the past producing mine, right?
Yeah.
That you acquired, yeah.
So for us, and I guess the thing about Novador, and you were right, the entire project is called Val-d'Or East.
Right, yeah, sorry.
That side of Val-d'Or, which is only 20 minutes from downtown, 20 minutes from Sigma-Lamaque, it's all overburden covered.
Okay.
So the geological window was hard to assess.
All right.
Because there hadn't been, we had geological maps, but it was mostly blind exploration.
Okay.
And so for us, what we looked at was, we knew geologically that the Val-d'Or to the west, where all of, 30, 40 million ounces of production, we knew that geology was continuing through. We couldn't see it.
Right. Okay.
But we knew it was on the other side.
I got it.
And we looked at it, and I think for me, it was really the lack of exploration on that side.
Yeah, I see. Okay.
So there was a lot of room for us to go out, and people always talk about this low-hanging fruit.
Yeah.
And so,
right.
the easy stuff.
Yeah, right.
And so on the west side, the easy stuff had all been found, but on this east side, where it was all covered and you couldn't really see it, we felt that there was still a lot of potential for new discoveries.
Got it.
And we took a bit of a chance, because that 700,000 ounces may not have grown, but it ended up being that geological window was there.
I see.
And it just kept growing and growing.
Right. So it's just like, on the west side of Val-d'Or, which, I've driven down a bunch of times, right through the highways, the Trans-Canada. Is that
That's right?
Yeah, Trans-Canada just goes straight there. And there's the Malartic mine, which is huge and has mined millions and millions of ounces. And there's the LaRonde mine.
Lapa, Westwood, Iron Gold still in production.
Further west. And so they're all, you got, and so you guys were like, look, why shouldn't this continue, this trend, if they found, and there's that's amazing.
And when you look at it, there's a structure called the Cadillac Break.
Yeah.
And that goes all the way from Kirkland Lake, Ontario, all the way to Val-d'Or. So hundreds of miles.
Yeah.
And that's the most prolific structure. Most of these deposits in Kirkland Lake, Rouyn-Noranda, Val-d'Or, like all along that break, the gold is there because that's the plumbing system.
Yeah.
And so when you look at Val-d'Or, that plumbing system continues past.
Yeah.
And yet it was really underexplored. And I think it was because it was more difficult. It was blind exploration. And if you can go 20 minutes to the west and trip over deposits, well, that's where you're going to go. That's where people are going to go. So it was just neglected, underappreciated.
All right, cool. So when you start drilling you start drilling around the former Monique mine, which was an underground mine. Did you have a sense as to whether or not this would be an underground or open pit, deposit?
We already had, because there were 700,000 ounces there already, we knew that the orientation, the geometry, one of the G's, the geometry suggested that if we really wanted to exploit the big system, it would have to be open pit.
Okay. All right.
And there is underground potential, but you wouldn't get as many ounces if you just went underground.
Right. Okay. Got it. Okay. So how do you start the drilling program then? Does that inform how the drill program starts, or do you just kind of, or like what are you thinking about in terms of how you can, when you first start, how do you start? Where do you put the first hole, relative to the,
And it's interesting because for us, the easy answer is you just step out from the old stuff,
Right.
and you just keep making it bigger, and you trace along that structure, and you just keep drilling it and hoping that every time you step out, you find it again.
Right.
So that's the first kind of. But for us, we also wanted to start looking deeper on it.
Okay.
And so our first drill program was not only stepping out and just expanding that near surface horizon, particularly for an open pit, but we also did some deep drilling to see how deep the roots went for this mineralized system.
Okay.
And we went almost a kilometer, so
deep, right?
Yeah. On that system, and we hit it.
Right.
And so we know that there's deep roots. So although we're focused on the open pit, when you can look at a transition later in the mine life to an underground.
And underground.
Yeah.
Okay. I was going to ask another question just about the board composition. So to what extent, so the chairman of your board had been the CEO of Barrick, which was the biggest gold mining company in the world. How do you compose the board, and how does the board help you through your process of finding, of delineating this deposit?
And so because I have to look at the company, when I first started, I was a geologist, and it was like you're de facto CEO.
Yeah.
But then as the company grows and you have success, you've got to start looking and growing the company in multiple aspects.
Yeah.
And so for me, the board, and people have commented, when you look at our board, it's more reminiscent of a board you'd see in a mid-tier producer.
Yeah.
Like we've got some really, really, high level talent in our board. So we've got Jamie Sokolsky, former CEO of Barrick, as the chair, Renaud Adams, current CEO of IAMGOLD.
Yeah.
And then so Jamie Horvat, who of course was in the financial side.
Yeah.
Sasha Bukacheva, who is an analyst, mining analyst, and then Shannon McRae, who was the director for Barrick Exploration.
Okay. Wow.
So Shannon would be kind of my
counterpart
on the board.
Yeah.
And so I really rely on her for my exploration.
Nice.
And Dennis Peterson, corporate securities lawyer.
Okay.
But everybody else has skill sets that help me grow this company in all of its facets.
Got it. Okay.
And so it was really kind of critical for me and we've always had a very kind of collegial, like it's a collaborative effort between the board and management.
That's great. Okay.
Yeah, so it works really well.
So you ended up defining an open pit and underground resource at Novador, which was in the millions of ounces.
Yeah.
I forget off the top of my head, but it's, I think it's, and then you put out a PEA, a preliminary economic assessment, which put the parameters around what a mine could potentially look like.
Yeah.
You're planning on, are you still going to put the PFS out?
So at this point,
it depends, but
depends,
okay. So you're on the way to putting out a PFS, which is a little bit more defined. But but at the end of the day, what you did come out with from a PA perspective was around 250,000 ounces a year at around $1,000 an ounce for what could be 20 years or more. Could you talk a little bit about, like, that's broad, but can you talk a little bit about what you actually came up with here?
Yeah, so it grew from and maybe we'll take a little bit through the progression. So we started out at 700. Yeah. Did our first drill program, went to 1.4 million, so we doubled it. So it was a really good indication that there was a sizable system. Then we went and we doubled it again. So in our next drilling, we'd added, by that time, we have 3 deposits. So there's Pascalis, Monique, and Corvin. All 3 of those were involved in that next resource. We went to 3.2 million, I think.
Right.
Then 4.1 as we started to, to start doing infill drilling, bringing our categories from inferred ounces to measured and indicated ounces. So we went from 3.2 to 4.1. And then in 2023, I believe, we hit the 5 million.
Right, exactly.
So at 4 million, we decided this thing is, we were going for our goal was 2 to 3. So now the project has grown to 4. We decided to wrap some economics around it.
Okay.
What does this look like as a mining project?
Yeah, okay.
And that was, interestingly enough, that's the first one was where we hit just over 200,000.
Right.
It surprised a lot of people. People
Yeah.
thought we were going to be in the 150 range.
Right.
We crossed a psychological threshold of 200,000. And then we grew it again another 25%. We went from 4.1 to, I think, 5.1. And that's when we did the updated PEA.
Okay.
And then we had a larger deposit. We went for slightly kind of bigger scale, and we hit the 255,000 ounces a year.
Right.
And so at that point, we were now starting our work on the PFS.
Okay.
And really, between the preliminary economic assessment report to the pre-feasibility report, it's about confidence.
Okay.
So what it does is, and I guess importantly, in the PEA, we've got what we consider a mineable resource.
Right.
In the PFS, we will generate a mineable reserve.
Right.
And so obviously bringing up the confidence level.
Yeah.
And so we've started, we start at 5 million ounces, we started the PFS. Then we put out our next resource update and we hit 10 million.
Right.
So this project, the system is immense. It just keeps growing and growing.
Right. Right. And when you say the confidence level, it's just so taking it from inferred, so like it's just a spacing, right? Drill hole spacing.
Okay, So there's 2 points we look at from the PEA to the PFS. It's the drill spacing. So inferred ounces are, and let's say I could have a drill hole here and 300 feet away, and I'm kind of interpolating that
right.
It'll be there in the middle, but I don't know until I actually drill it.
Yeah.
So those are inferred ounces because there's a chance that maybe that system pinches and they're not all there. Measured and indicated is where I start to come in and drill more closely spaced,
right,
and bring up the confidence that it is continuous and those ounces are there.
Okay. Right.
The other thing about a PFS is in a PEA, I'm allowed to use assumptions.
Right.
And that's a lot of our things. It's like, oh, well, the mine next door has this cost.
All right.
So we'll use that in ours, but we haven't done the work to kind of say specifically on ours.
Right.
For the PFS, all of the work is now measured.
Okay.
It's measured data, not assumed data.
Right.
It's specific to our project, the metallurgical, the geotechnical. We've done all of that work.
And the costs have to be like a first principles, they call it cost. So they actually have to say like, you need a contractor to drill, you have to get quotes from the drill contractor or something like that.
I think it becomes, they take it up another level in terms of, because a PEA, and I don't know if this number is right or not, but this is the one, a PEA is plus or minus 30%.
Right.
A PFS is plus or minus 20.
Yeah.
And then a full feasibility is plus or minus 10.
Right. Okay.
And so we bring up that confidence level that the numbers we're using are getting closer and closer to reality.
Okay, got it. Okay, great. And so you've kind of, you've put together what looks like is going to be a great, fantastic mine in a great place. And so then at what point do you figure that you're going to put it up for sale or not, or just see if anybody wants to take a bite or that kind of thing relative to finding more, or even potentially going down the road of building it?
Yeah. And this is the, the decision that companies eventually have to make. Most don't make this decision, but you have to decide, am I going to become a builder? Am I going to become a producer?
Right.
And most exploration companies, and I'll be very honest, my skill set is finding it.
Yeah.
I've never built a mine.
Yeah.
And so for me, it's, I think I add value in the earlier stages. So I've never really thought of myself as a builder.
Okay. Got
it. And I think, most of our shareholders, most of the investing, they look at a lot of junior exploration companies and realize that, that our goal is or our job is to find it.
Right.
And then let the companies whose job it is to produce it, produce it.
And you've pretty much found enough at 10 million ounces.
Well, this is the thing. It's a funny, and I didn't realize it until we hit 10 million ounces. But once you reach a certain threshold, people don't really care if it gets bigger.
Right.
It's like, oh my gosh, it's already 10
it's
million
already really
ounces.
big.
Who
Yeah,
cares
yeah.
if it's 11, 12?
Right.
Now spend your money on bringing this thing kind of into development and adding value that way.
Right. Okay.
Yeah.
And just a quick question, to go back, I remember you're saying that like Pascalis was that's the best deposit. There's the highest grade, I think, right amongst or is it Corvan or I guess it doesn't. Yeah.
To me, well, the grade profiles change across each one of them and within zones within each.
Yeah, yeah.
Like there's high grade starter pits on Pascalis and Monique.
Right. Okay.
Which are really attractive. But Corvin has some very high grade lenses.
Okay, I got it.
And so each one of them, you have to model each one separately.
Yeah.
And
but I guess I was going to ask, were those Pascalis and Corvan, were those new discoveries, or did they also have, like, did you say, let's just step out like a long trend from those, or how did you find those?
I have to be honest.
Yeah.
None of them were.
Okay, so they were all just past produced.
So Pascalis was a mine called Bellevaux.
Okay.
And that was all underground. And you're right, higher grades in the underground deposit.
Yeah.
And then Monique was Richemont, which was Renault's company, or one of our directors.
Yeah.
So that was an open pit, small. I think it produced 50,000 ounces in a small open pit. And then Corvin, there was actually, interestingly enough, a mine called Boussière.
Okay.
Which burned down in the 40s.
Okay.
And because it was the war years, they weren't allowed to rebuild because gold wasn't a strategic mineral.
Right.
So they weren't allowed to rebuild it. So it kind of got forgotten.
Yeah. Yeah. I mean, it comes up like one thing that I hear over and over again is the best place to find a gold mine is near a gold mine.
Is in the shadow of a head frame.
Yeah. Right. So it's just like, let's just go and do it. Let's keep it simple, stupid, I guess, at the end of the day.
And I think what happened with us on Val-d'Or East, the project, was that it just got neglected.
Yeah.
Underappreciated, forgotten.
Yeah.
And very much like Borden, our discovery there was in an area that geologists didn't think would really host a large gold deposit.
Right. Okay.
And we I guess maybe one of our strengths is that we don't kind of follow traditional dogma.
Yeah.
We say, hey, if there's a potential there, let's go look.
Right. Okay. That sounds okay. Great.
Yeah.
So Fresnillo, that deal should close in around 3 months or so, and shareholders get our cash consideration. What do you do next?
Yeah. So, and because I love looking forward, I'm already kind of generating ideas.
Okay, great.
Yeah. So we'd like to hit the ground running on
Well, stay tuned.
Probe 3. Yeah.
We'll stay tuned for Probe 3.
Yeah.
Awesome. Probe 3.0. Awesome. Okay, great. Well, thanks so much. Thanks so much for your time. It's really fantastic. I mean, and hopefully you guys, learned how to find a gold mine from the best. From the best.
Well, I think all we can say is you need a lot of luck. Yeah.
Very good one. Yeah. Thanks so much. And thanks, Dave. I really appreciate it.
Okay, thanks.
Thank you.
Christopher Mancini, CFA, is an associate portfolio manager of the Gabelli Gold Fund. This interview was recorded on November 5, 2025. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. As of September 30, 2025, affiliates of GAMCO Investors Incorporated beneficially own 7.7% of Newmont, 2.4% of Barrick, 2% of Discovery Silver, 1.9% of IM Gold, 1.3% of Fresnillo, and less than 1% of all other companies mentioned. The analysts' views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or of the firm as a whole. Because the investment personnel at GAMCO and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain GAMCO personnel may know the substance of the posting prior to its posting. Funds investing in a single sector may be subject to more volatility than funds that invest more broadly. Investors should carefully consider the investment objectives, risks, charges and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 800-GABELLI or visit www.gabelli.com. Distributed by G. Distributors, LLC, a registered broker-dealer and FINRA member firm. 1 Corporate Center, Rye, New York, 10580.